Good morning or late morning to all our European participants. Good afternoon to the Asian participants. My name is Barbara. I'm in charge of Efma webinars, and I have a pleasure to welcome all of you to the very first Efma and Capgemini FinTechVisor webinar, the path to collaboration. The main focus for today will be to speak about fintech and bank partnerships. And for this purpose, we invited two great speakers from Efma and Capgemini. So in the beginning, before we start with the presentation, let me firstly introduce Elias Ganem, Vice President, Chief New Technologies Officer and FinTech Lead from Capgemini Financial Services Europe. Elias will be one of our speakers and will be also moderating the panel discussion today. So Elias, welcome to the session. And then we also have Lubomir Olach, Director of International Development and Member Relations from Efma. Lubomir will be introducing the FinTechVisor initiative to all of you and will also guide you through the live demo of the portal. So Lubo, welcome to the session as well.
Good morning, everybody.
So before we start, let me just quickly give you some important background information about the webinar. So as you may understand, the main objective is to guide you through the FinTechVisor portal. And before we guide you through the demo, Elias will be the one presenting the main insights from the World FinTech Report that has been jointly published by Efma and Capgemini. Then Lubo will be the one presenting the FinTechVisor. So those of you who are not as familiar with the platform and maybe do not have some information about the benefits and the background, Lubo will be the one giving them to you today. Last but not least, we invited three great fintech companies to join the panel discussion. They will be presenting the real partnership cases, and Elias will be the one triggering the conversation around the partnership cases. So we'll introduce the fintech companies later on, but please stand by and you will definitely hear a very interesting discussion afterwards. If you have any questions in the meantime, please feel free to write them down, or you can also use the hand button in order to ask for a kind of speaking slot. Then I will unmute your mic and you'll be able to speak. The Q&A session will be probably held in the end of the session. So then I will be addressing all the questions to the speakers. So as you may have noticed, your microphones are muted in order to avoid any communication noise. So in case you want to speak and join the discussion, you definitely need to let me know with the hand button. Last but not least, the session is being recorded, so all of you will receive a follow-up email with the video recording and with the presentation deck if you would like to share or review with your colleagues. So before I give a word to Elias, maybe a very quick background about why Efma and Capgemini joined forces. Definitely, this is not the first time we have a project together. In the past years, we have managed to collaborate on several world reports in order to provide some strategic insights and to track the trend in the industry. So we firstly started with the World Retail Banking Report, focused on the retail banking trends that we track on a kind of annual basis. Then we also have a dedicated report for the insurance. And in the past 2 years, we also have World FinTech Report, so kind of report that really aims to bring some kind of space for the fintechs, because we are definitely aware of the fact that fintechs are disrupting the industry. They are definitely not the competitors anymore, and we want to support bank and fintech partnerships. And this is really like the main objective of the report that will be presented by Elias later on. Maybe why we joined forces. So Capgemini has a definitely high quality expertise. Efma is trying to engage our members community, the largest peer-to-peer banking community worldwide. So thanks to that, we are really compiling a great reports. And now, Elias, it's your time to present the last one focused on the fintechs. So Elias, the space and the floor is yours.
Thank you, Barbara. Thank you so much for everybody for joining today's presentation. And let me share with you a little bit where do we stand. And let me start by saying that today, really, you all might have noticed there is major paradigm shift that have happened. First of all, consumers are looking to buy experiences. while we, financial services, large organization, incumbent, traditional, the way you want to call them is the same, we are used to sell products. Take my credit card, take my insurance, take my mortgage, while the consumer is looking, I want to travel the world and I want to be safe. The other major paradigm is ownership versus access. All traditional players have been investing fortunes in building ownership of the relationship with the client. They have created the right protection, the right solutions to make sure that the customer is well protected and safe. And the problem now is startups comes and thanks to PSD2 are able to access the information without having to invest significantly in owning the client, protecting the client, and so on. So this paradigm shift can materialize in the following chart. If we put products at the bottom, a lot of product on the right, a single product on the left, and if we put friction on the vertical axis, where friction means multi-products, multi-channel, cross-selling, upselling, with zero friction at the bottom and a lot of friction on the top, all banks and insurance are here. They have all the products we need, but they have problem with a lot of friction from one product to another. Today, this morning, to come to my office, I open my app and I click one button called Uber, and voila. I was able to move from A to B. I was able to pay. I was able to geolocate the car, and I was able to have an opinion about the driver just with one click. And every single day, there is a new startup that comes and is taking a product from a bank and insurance, Revolut, TransferWise, only to give some names, are taking one product from the bank and insurance and taking it to make a startup out of it. So the consequence is bank and insurance will slowly but surely keep the friction but reduce the product. Now on the other side, startups are also having problems because they are having problems scaling. They have problem growing, going international. And if that's the situation, they are even in a tougher position because they have a single product and a lot of friction. We ended up with the worst place, which is game over. So the best opportunity is to bring what banks do best, which is the variety of products, and what startups do best, which is a seamless experience. And that's where the platform come to play. Now life will be quite easy if there were only us and them. The problem, there is what we call the black swan. And by the way, Barbara, there's a lot of noise on your side, so if you could mute would be fantastic. So
we are muted, but okay.
Mute everybody else than me in this case. So the black swan is this problem that is invisible to everyone but could happen. The first one is the regulator that now is enabling startups to play into the game of banking, and also enabling through PSD2 access to data. The second black swan are the telco non-banks that are becoming banks. If you look at Orange in France, 2 years ago, Orange was just a telco. Today, Orange is a bank as well. And then, of course, we've all heard about the GAFA, but I want to extend the definition to the GAFA-MAT, M for Microsoft, A for Alibaba, and T for Tencent. So with that in mind, look at what's happening today. Well, in France, Les Echos, being the French newspaper, in February this year said French banks are struggling to attract new customers. Société Générale, Crédit Agricole, BNP are barely increasing their customer base since 2015. Customers are heading to the neobanks. Talking about the impact of the GAFA, in one slide, well, this is what Amazon across the world is doing in the financial services. A lot of things are happening already. Also, we've all heard that Amazon has been in discussion with Wells Fargo in the US, and Bain & Company evaluated that if Amazon were to become a bank, they could bring 70 million customers in 5 years. And I think the worst one, or the worst or the best, depending where you stand, is what we see here from market cap, when we see that the 10th largest banking group is not a banking group. Is nothing more than Alibaba. Ant Financial, which is the financial arm of Alibaba, has become the 10th largest banking group in market cap. And if we look at our European banks, Barclays, UniCredit, BNPP, Santander, they are behind Alibaba. So clearly today, the bank of the future has a lot to do so it can compete with the incumbent. It has to build the right experience to have everything on mobile, handle the legacy, handle the reduction of cost, be agile, build the ecosystem, and be compliant all the time. And all that comes on top of the traditional problem of managing risk, simplifying business model, optimizing distribution. So clearly, the landscape is tough to build the financial service of the future. We've done, Barbara mentioned, we've done the FinTech report. We published it a few months back, and we will have a new one in early next year. I strongly recommend you to go on the fintechworldreport.com, where you could first download the report that we've done in collaboration with Efma, but also you can watch a lot of videos of agent of change that describe the bank of the future. What was the main outcome of the FinTech report? First, better customer centricity and use of emerging technology is giving an advance to FinTech versus traditional banks. We all want to be all the time geolocalized and personalized. When I travel from country A to country B, it's only Revolut that tells me, welcome to France. Now we will make sure that your transaction in France will be safe. And if we have promotion in France, we'll give them to you. BNPP does not do that when I travel to Spain. But second comment is complementary strengths. FinTech and incumbent need each other to bring scalability on one side and to bring experience. So there's clearly a symbiotic relationship between the two. And let's do that, because if not, FinTech will fail to grow and banks will fail to retain customer. Third comment is finding the right partner for this collaboration is essential. Building the right engagement model is essential for the growth of the business and essential for the speed of doing it, because quickly the big tech are coming fast and are eating our business. Now, collaboration means win-win, and clearly both sides of the equation have a lot to contribute and complement. Banks, traditional services, insurance bring risk management, infrastructure, economy of scale, capital from an acquisition or from an investment, while startups bring agility, innovation, cost reduction, and so on. And by the way, when you hear me saying FinTech, please hear FinTech, InsurTech, RegTech, Tech for Fin, anyone, any small entity that is able to provide a solution, a service, and a better customer experience with a large organization. And to make that happen, we need to be aware that it's important to do it quickly, because the big tech have both things that banks or insurance as well as startups can bring. They have fully redefined the customer experience. They have huge economy of scale. Their operational efficiency is amazing. Their R&D is in their DNA, and they work on it 24/7. Their customer data is huge, updated, and active. Everything is personalized. Have you noted that when you go on Amazon during weekdays or during weekend days, you have different offers? They know you, they know what you are looking for, and they know what is your mindset. And as such, you give them the customer trust and loyalty. And they have every single day an innovative product. They have the luxury of being rich, being global, and have the culture of test fast, learn fast, fail fast, or grow fast. And if you look at the right side, each one of them has already initiatives happening with in the financial services. Now, to give you one also a bigger picture, it's not only the retail that is being challenged. We've done the World Wealth Report with Efma as well, and I want to share with you a single slide that shows that 60% of the high net worth individuals are keen to engage with a big tech within the next 6 months. So it's not anymore an utopia, it's a reality. And the scary part is on the right side, where almost 40% of the high net worth individuals are saying that they would even give between 11 and 50% of their wealth to a big tech. So now imagine you are the wealth manager at one of the large banks, and you are about to lose up to 50% of your portfolio. That becomes significantly scary. So it's more than time to make sure that the collaboration exists, and how to move ahead in this collaboration. At Capgemini, with the collaboration of Efma, we came up with this solution that we describe as the Capgemini Scale-Up Qualification, in order to enable effective collaboration. And here, let me say first things first. Startups are cool, but startups are not what large corporations are looking for when it comes to effective collaboration. They look for startups to create buzz, to create laboratories, to create POC. But we are in the business of industrialization. We are in the business of effective collaboration. And as such, we believe that scale-ups are the right partners to do that. And we have identified a definition of a scale-up, a large definition. It's a startup that has raised at least €1 million, dollar, or pound, that has a full-time employed management. So it's not anymore a single guy that does everything, but it's a team that is working and has the money to hire the right people. And finally, that it has business traction, i.e. at least €200,000 of sales, which means that it's out of the POC phase and now is able to grow significantly the business. I'm sure all of you, when you meet with a large organization, more than less, they ask you four big questions. First is, do you have the right team to work with us? Do you have the right people at the right place? Are you financially stable, and will you be here in 12 months? Do you have the right traction in terms of business, and do you have the right technology to grow and scale with me? And each one of these 4 questions is divided in different sub-questions. So in order to make that in a very structured methodology, we took 6 months. We did co-creation with Efma, with Startup Bootcamp, with insurance company, with banks, and with some startups, some of you around on this call. And we came up with a questionnaire, a very detailed, structured, qualified questionnaire, covering all the boxes that you see under the 4 pillars. And now we have a methodology that we call the 360-degree approach to evaluate the maturity of a scale-up towards collaboration. We do it in 4 steps. We start by doing a web scraping to understand what is being said on the scale-up outside. We send the questionnaire to you, the scale-up, and we evaluate you. We set up interviews with subject matter experts from Capgemini that will challenge you on your answers. And then we ask you to give us some client names, and we contact them and ask them in an NPS approach, Net Promoter approach, how likely would you recommend the scale-up to somebody else? Based on that, we end up with 5 levels of scale-ups. A non-scale-up, so we will not qualify it, a promising scale-up, an emerging scale-up, an intermediate, or an advanced scale-up. These 4 criteria, these 4 levels will help us establish the right collaboration between scale-ups and clients. And why are we doing that? To make sure that you scale-ups have the right recognition, the right credibility, and the right visibility to engage with the client, with us, or by the way, without us. And finally, we want to do that to make sure that when we engage with clients, a bank, an insurance company, we tell them that you need an innovation as a service with a scale-up. And we have put together an offering where all of you are part of it in order to create an effective collaboration. We want to be able to do a diagnosis about the problem that the bank is facing, or the insurance. We need to understand what they do well. What they do well, we will keep it, and their weaknesses. And the weaknesses, we will replace them by a scale-up. We want to make sure that as we bring the scale-up, we understand how it will navigate within the organization, because we all know that the scale-up dies in a large organization with the people of compliance, the people of purchasing, the people of IT. And we want to design how the ideal customer experience will look like. Then we will go on the market, we will scout the ecosystem, and we will identify the right partners. We will qualify them and eliminate many of them, and we will keep only the scale-up that we think are in the right maturity stage. And then we will design the new experience. Finally, we'll orchestrate it by cutting together all the pieces and taking it to market. The approach that we do is either a deep dive step by step, or even better, a full horizontal end-to-end approach in order to engage with a client and help him in a full improvement of the experience. The objective of that is to build a story where the financial institution has a challenge at the beginning, and thanks to collaboration, we end up with a new experience. With that said, the objective is to make sure that we can enable the future of financial services through collaboration between large and small.
Unmuted.
That's a quick snapshot of what we do. More than happy to take questions at the end. And as we continue speaking, please write your questions and we will approach them after that. Barbara, back to you.
Elias, thank you very much for your presentation. We are happy to answer all the questions from the audience. And now I will give a space to my colleague Lubomir. He will be presenting to you the FinTechVisor portal as well as a demo of the portal.
Hello everybody. Again, very good morning to all fintechers, bankers, financial institutions. Happy to have you on the call. As Elias said, we started this collaboration to really bring the valuable insights into the not only fintech but also financial institutions industry. And when we sat together, we were thinking, okay, how not only to bring on an annual basis a World FinTech report and the certification program, but how to really create an ecosystem where all relevant and important parties like fintechs, financial institutions, and enablers, those like accelerators, Elias mentioned already, startup bootcamps, or accelerators. So there are many who could actually create this important ecosystem. Efma is the one who creates the biggest, as Barbara said, for financial institutions. But this is a really good advantage where the financial institutions can meet the fintechers and fintechs somewhere. And to be able to do so, simply we created a new tool we just started, and we call it FinTechVisor. And on that FinTechVisor program, and you can hear very correctly, we were inspired by TripAdvisor. So simply where fintechs can be, as Elias already said, qualified and rated, and bankers, the other part, can have better understanding with whom they communicate, what kind of solutions the fintechs bring, and what the potential of collaborations or partnerships might have. All that means that simply fintechs would need to, of course, post what they do. And simply to show them let me change the slides. And the objectives. With the objectives, when we were discussing the objectives, we simply wanted to have, as mentioned, fintechs and financial institutions to have really a networking and a global platform, and having all these game changers on the portal, and really make it a global community for fintechs and financial institutions. So as I mentioned, it's a FinTechVisor, and on the next slide, you can see that to be able to do so, we simply need you fintechs to post your, first of all, your profile, then of course solution, and then that's the way how we can get the feedback from the community, from the financial institutions, or from other fintechs, because it won't be only banks but also fintechs. As we see, there are many collaborations among the fintechs as well. Of course, just to motivate you more and to really give a better understanding among so many fintechs, we'll also organize a FinTechVisor contest next year, where I will say more later on. So one part of the barricade are fintechs, but on the other, of course, we have financial institutions. And we will, together with Capgemini, include several features which help the financial institutions to better monitor all the startup opportunities for successful collaboration. And we will also help with a searching engine to identify those disruptive ones with solutions valuable for banks and other financial institutions like insurance as well. To have a better categorization, you can see on the next slide that we will have, please, if you can put the next one, and of course you logged in, you will find that the main categories are the following. Okay, will be except for the insurance and key personal financial management tools, then to RegTechs and InsurTechs as it was mentioned. The following slide, once you, of course, you registered, you will have a nice profile interface, as you can see on the slide. There we would like to ask you to fill out as much as important information that all the readers can really follow what kind of company you are. Of course, together with your solutions, where of course you can also submit the video and other relevant visualization slides or whatever, which can help the others to better identify your solutions and your relevance for them. How they will do it? Yeah, that's the question. Of course, through search engine, as you could see, and of course via submission form. So you can imagine there is a banker, for example, on the other side. It's a kind of a project manager who is responsible for payments. And I would like to know more about what we have on the FinTechVisor portal. So he actually clicked on this important thing and can have more results on the next page. And you can see on the slide up there. So you will see, okay, he is interested in money transferring, who is it, where he's from, and so on. And now on the result page, he could see, okay, what solutions and companies are offering such service. Once he identifies the right one, of course, he has the opportunity to chat directly to the person and look at and see, you know, and start up the whole collaboration on, let's say, the first initial conversation. This can be done from bank to fintech, but also from fintech to fintech, as I said, to keep up the whole community live. Just to update you with all the information, what's going on within the industry, we will have a dedicated corner, a content corner, where you could see what's going on with the latest partnerships and collaboration in the financial services industry. Of course, since we are as an association who gathers banks and insurance and other financial institutions, we will have other bankers, partners to better engage not only their partnerships and their fintechs, but also others, and also enablers, as I said, like Startup Bootcamp, Supercharger, and other similar accelerators and incubators. And of course, in the end, we will have the FinTechVisor contest, which will come very soon. And the team around me is really looking forward, because that will be the chance where you as a fintech and organization could be visible to the whole financial industry via this contest, and have the opportunity to speak to the Efma community directly on one of the networking platforms. I think this is all from my side. Please, for any questions and requests, you can contact directly Barbara, who is sitting next to me, and the team, who is also Esther and Uri, who will be very helpful and will assist you in at your questions. Barbara, it's back to you.
Lubomir, thank you so much for a great presentation. I mean, let's not waste the time because we're running out of the time. So Elias, going back to you, we have a very nice panel discussion ready to go. So the floor is yours again.
Thank you so much. And I'm really happy to have today 3 scale-ups that are very active in the market. And I've met with each one of them, and I'm amazed by the track record that they have, by the people they have, by the financial solidity that they have, and by the technology that they have. All of them are logically the perfect candidate to be part of the qualification process that we talked about. Today we have the honor to have 3 scale-ups. We have Damien, who is the chairman of Lemonway, with Karine, who is the chief marketing officer. We have Oscar from Payki, and we have Ashley from MatchMove. What we're going to do right now is give a chance for each one of the speakers in a very short 3 minutes to give us a presentation about what they do and how they do it, mainly through a use case. And I please suggest for everyone on the call to drop your questions. At the end of the presentation, at the end of the engagement, we will have a discussion with Damien, Oscar, and Ashley, and we want to also get your questions. Damien, all yours. The floor is yours for the next 3 minutes.
Thank you very much. So Lemonway is a payment institution working in Europe on a pan-European scale. We passported our license we got in France in late 2012, and our job is to be the treasurer for marketplaces, especially financial marketplaces, since we are servicing 200 crowdfunding platforms all over Europe, in addition to 1,200 other kind of marketplaces or merchants. We are issuing e-wallets by millions. You can flip the slide. We are issuing e-wallets by millions because this new economy requires wallets. And therefore, we are not only issuing the wallet, managing the wallets, but also doing the KYC. Currently, we have opened 5 million e-wallets on behalf of these marketplaces, especially crowdfunding platforms. And to do our job, we need to work with banks, and that's why we want to speak about our bank relationships today. We are working primarily with BNP all over Europe for euro payments, and also with Barclays and Banco Sabadell for non-euro payments. And we are also working with La Banque Postale and Crédit Mutuel CIC. And that's it.
Wow, you've been even faster than expected. You still have 1 minute to go if you want to share more of. Tell us about the use case in a minute that you have done with one of these guys and what's been your experience.
Yes, so at the beginning we worked with small marketplaces. I mean, other fintechs. We were servicing small fintechs. And then little by little, we worked with major clients, such as the French Federation of Soccer or Auchan Group, which is a major retailer. But at the beginning, those marketplaces who came to us were already regulated. So they knew they had to comply with the new regulation, while the big corporations didn't know about that.
Tell us more about one use case. Let's try to be specific on, we worked with a bank, we don't need to mention the name.
Oh, yes. It's not a choice. I mean, we have to access to the interbank payment networks. So we have to open, for example, escrow accounts on our name with all kinds of banks, because our job is to collect the money from the clients of marketplaces in order to pay their vendors. And this money has to be put into escrow account. We cannot keep it on our bank account. Okay, it must be an escrow account. And this escrow type of account, bank account, have to be open in a bank.
Fantastic. Great. Thank you so much for that. I pass it to Oscar, who will tell us a little bit about Payki and who you are, what you do. Oscar, the floor is yours for the next 3 minutes.
Thank you, Elias, and thank you for having the opportunity to present here. So Payki is an Israeli company founded in 2014 with about 30 employees and growing by the day. Our investors include financial institutions like MasterCard, SBI Group of Japan, Commerzbank, Sion Commercial Bank. So we have a solid foundation from the financial sector itself. Flip, please. Now, what we see in the market is that millennials are spending most of their time on social messaging platforms. In fact, 85% is spent in only a handful of applications. WhatsApp, Facebook, Facebook Messenger, Viber, Line, WeChat, Instagram, Snapchat. That's where young people spend their entire online or mobile life. They converse, they consume and share content. They also talk about money. And that's where the actual engagement is taking place. And with over 3 million apps in the app stores, application developers, including banks, telcos, and mobile wallet providers, are struggling to get the intention and engagement with their end users. And they're looking for ways to actually keep that engagement going. And that's actually where we are coming in. Flip, please. So what we have developed is a social banking solution, a banking keyboard that is seamlessly integrated with the bank's mobile app or wallet solution and gives access from the customized keyboard to a variety of financial or banking services. Next slide, please. And these services can include things like sending or requesting money, your account balance or information, cardless cash, bill payments, loyalty programs, mobile account top-up, etc. It's a completely white label and customizable solution. And again, it's integrated with the bank or mobile wallet application. Next slide, please. Flip, please.
Go on, go on.
Okay. And so essentially, it makes the financial services available inside any application on your phone. That's the beauty of it. So rather than siloed integrations with WhatsApp or Facebook Messenger, the customized banking keyboard gives access to your services across any applications. We're soon live with 15 banks across the world, including UOB in Singapore, Shinhan and Standard Chartered Bank in Korea, Garanti Bank in Turkey, Westpac in Australia, and also ING in Poland. Next slide, please. So with ING, we have created a customized keyboard that allows you to send money and also create a unique merchant pay code that allows you to do online payments. Next slide, please. And just to show you in few seconds, basically the flow is you're in a social application, and again, it doesn't matter WhatsApp or Facebook Messenger. You click on the banking button, you go through the menu, you choose a contact, authenticate using the existing authentication, and you confirm the transaction. And basically this...
Oscar, if you don't mind, I need to stop you here just to make sure that we are on time. Okay. And I will need to pass it to Ashley. We'll come back to it more in details as we go into Q&A. No problem. I'll flip the slides, if I can, to get to Ashley.
Sure.
Ashley, all yours.
Okay, thank you. Hi, this is Ashley. Good morning, everybody. MatchMove is a B2B provider of a payment solution to enterprises. We are headquartered in Singapore, 150 people strong, over 6 markets, mainly in ASEAN and South Asia, from India, Indonesia, Singapore, Philippines, Vietnam, and Thailand. We operate as a platform as a service model where enterprises take our API-driven payment solution to build their own branded payment services, as you see on the presentation, whereby we can put your logo on the app as well as on the payment cards that we issue. We started out because also there is we are focused on ASEAN and Asia because right now there is a large population of unbanked and uncarded, and the demand for payment cards is uprising. We started out providing wallet solutions, prepaid card issuance, and we have moved on to money transfer, be it domestic as well as further expanding into cross-border money transfer, as well as looking into lending disbursements. So in terms of our product offering, as you can see, it's about spending, sending, and lending of money within any application of the enterprises. Next slide, please. Okay. The enterprise we serve come from various industry with there are various use cases that we support, and they can range from retail e-commerce to lifestyle apps like gaming and chat messaging. We also serve logistic transportation industries, as well as airlines, healthcare, and insurance. As you can see there, in terms of a partnership, by issuing a payments card, we involve not just the client itself. Over here, we have a multi-purpose wallet, which is TMW in India. We also, on the right side of the card, you see involve the bank, which is Federal Bank of India in this case, and also the card network MasterCard. So in line with our discussion on the big banks as well as FinTech, Federal Bank in this case play our partner in terms of the regulatory compliance risk aspect of the business structure, as well as help us with the money flow movement in terms of settlement with the card networks. I'm going to end here. So that's the brief description for MatchMovePay.
Ashley, tell us more. Yeah. So on one experience, are you done? Sorry.
Yes, I'm done.
Okay. So as you still have 30 seconds, give us one example that you have done with a bank and it has been successful. Yes.
So I will take this particular example, which we have on the previous slide, which is TMW. For TMW, they are multi-purpose wallet. However, as you know, in India, even though mobile phone and Wi-Fi penetration can be up to 40 to 50% or more, but in terms of credit and debit card penetration is only 3%. So then how do people with no bank account, with no credit or debit card buy things online? And then that goes to cash on delivery, which is huge in Asia. By working with Federal Bank, MasterCard, and TMW to issue this card, basically everybody has a chance to have a payment card right now. Last time, if you have no credit history, you cannot have a payment card. Without a payment card, you cannot pay online. So by helping TMW, which is the merchant, issue these cards right away to their consumers, and then they topping up the cards, now you give a large unbanked and uncarded population a card whereby they can buy things online. That is a huge value proposition to a lot of merchants out there in ASEAN, where a lot of the consumers are unable to pay online.
Fantastic. Thank you so much, Ashley. Now we're in a discussion stage, and as you would have noticed, we try to keep the conversation sharp and fast. I will have some question for you, and then after that, I will show the first question, and then I will ask Barbara if you have got some questions from the public to bring them on. But my first question to the three of you, Ashley, Damien, and Oscar, is tell us about your biggest failure collaborating with a large organization. I don't need the name, but I would love to hear from you why it has failed. Maybe you're going to start with Ashley.
Hi. Yes, I think in the beginning when we were new, maybe about 3-4 years ago, one of the things is, especially when we work with bank in each of the country we are in, we go to the bank, we talk about the business case, the objective with the business teams, and later on, I think where things slow down is whereby we bring the compliance, regulatory, legal team in a little bit later into the process. So when you do that late in the process, I think it slows down, and when we have to repeat a lot of what we went through, in the last 3 to 4 months with the legal compliance team, which we didn't bring forth. And what we have done, hopefully more smartly as we've seen it now, is that we bring them forth at the front of the conversation as well, not to deter it, but to get their buy-in into why the business and the bank want to make this partnership with us. I think that is one of the key improvements that we've done over the last 1 year, whereby we have seen huge improvement in terms of time to market.
Thank you so much, Ashley. Oscar, to you, one failure, and why did it fail?
So one failure that I maybe want to mention is a large bank large international bank that we try to engage with and we went through, and this is in many banks nowadays, the usual way to engage is through their innovation departments or their accelerator program. And in many cases that works well. In this case, it proved to be a major delaying factor because basically we weren't exposed to the line of business. The people that would actually deploy our solution were holding the budget to do the actual deployment, and in the end, we spend a lot of time on engaging with an innovation department without getting to the actual, and up to today, to the actual line of business. Whereas in most other cases, we did. And so we learned, actually, the lesson learned is to, in an early stage, understand the process of how you can get from the initial engagement with the innovation department to the line of business, or even better, directly engage with them.
I love that, the process to partner. Damien, tell us a big failure and why.
We succeeded to self-finance our growth for 10 years because we were working on a pan-European scale, working in 28 countries, okay? And we needed a partnership with a pan-European bank. And we thought that big banks were pan-Europeans. In fact, yes, we were able to open bank accounts everywhere, but we could not activate them because the bank, for example, the bank was always asking for one bank relationship with their headquarters, not in all countries. Okay, so it's difficult for fintech that starts to open a bank relationship in all countries. The bank will require first to prove with the headquarters that it works. So it took 3 years to activate a bank account in Italy that started with IT, while all crowdfunding platforms in Italy are requesting this bank account starting with IT to make sure investors will send the money. They will not send the money to a bank account starting with DE or FR. See?
Interesting. Local. This means the one size fits all across multiple market does not work, and you need to have the local understanding of the regulation to adapt it. Very interesting to see the 3 approaches, the 3 problems that all of you have faced when it comes to collaboration. And clearly, it's a challenging route. Barbara, any feedback, any question, any comment from the audience?
Yes, we actually have a couple of questions, interesting ones. So let me maybe pick one that is much related to what Ashley just presented. The question is how the security aspect is considered and liability for frauds defined. I don't know, maybe you can also give a comment, Elias, but it was much more related to Ashley's solution.
Ashley, why don't you answer?
Hi, sure. Matchmove, one of the way that we thought it was unique, the way we go to market, is that in all the countries outside of Singapore that we operate in, we partner with a bank. In Singapore itself, we do not partner with any bank because we are actually a non-bank issuer of the card itself with MasterCard and other card networks. So we are a direct issuer. And how we how we actually cater to, security and compliance and risk is that because we are a direct issuer, we actually do this ourselves in our own business, B2C in Singapore. And when we do that end-to-end process, we actually build it onto our platform such that when we actually go outside of Singapore and we have to partner with a bank to provide these services, as a tech provider, we also have the business knowledge of how to take care of the security, risk, and compliance with regards to our jurisdiction. So that made it easier for us. That was the way that we went to market with our platform solution. We do it ourselves so that when we go outside of Singapore, we know how exactly to do the end-to-end processing.
Fantastic. Oscar or Damien, any comment on that regulatory aspect?
In
Oscar.
fact, no.
Sorry.
Yeah, this is Oscar. From my side, not that much because we are actually a front-end solution that, and that's also the beauty. We don't really require regulatory approval, so we do integrate with bank applications or wallet applications like Matchmove's.
Fantastic.
So,
and you, on your side?
I wanted to say, this is Damien speaking. I wanted to say that since we are a RegTech, we need to work with banks that are accepting the kind of business we are working with. For example, several banks are against crowdfunding. They will clearly not work with us if on accounts on a platform that are doing this kind of activity. And but in certain ways, very good to work with banks that are totally aligned with us, especially to fight against fraud. So the bank partnerships we have today are helping us to fight against fraud and to win new customers. So on the regulation side, we are totally aligned. But it's true that sometimes it does not work with banks because they are against or they do not accept working for crowdfunding platforms.
Fantastic. I'm going to stop you here, Damien. One question as we're running out of time. I'll give you one question and we'll ask Barbara to give us another question from the ground. When it comes to collaboration with large organizations, how trusted third party like EFMA, like Capgemini could help you generate more business, effective business, rather than just chit-chatting with clients? How best can we help you? Ashley?
Hi. I think the first part is definitely in terms of, being on the internet and all, there's a lot of information. And I think that's where also, the problems start. It's where are the good information that's filtered. And that's where the platform comes in, whereby, really like the fact that the platform is doing the qualification and the rating, and then the matching and fit between the FinTech and the FIs. So that would take away a lot of the frustration, maybe that both FinTech as well as the big banks are facing now. Who do we partner? I think most of them are realizing we need to partner. We are not foes, we are not enemy, but we need to partner. But how to find the right fit, and that's where the platform comes into play.
Fantastic. Thank you. Oscar?
Yes.
From a collaboration, how best trusted third party can help you get more business if need be?
So I think that a trusted third party can really help us qualify good use cases, speed up the process. For us as a small startup, obviously it's hard to have a global reach, have a good understanding of where all the opportunities are, even although we reach out and do a lot of marketing ourselves. But I think that is very important. And qualify, make the right introductions, speed up the process. I would say these are the most important things.
Message received. Damien, on your side, how best can we help you, Efma-Capgemini, accelerate growth?
We have a new head of marketing, Karine. She's coming from EFMA, and she will tell you more.
So yeah, from a program perspective, the FinTechVisor program and the scale-up qualification process is really a great opportunity for all fintechs seeking to develop their relation with financial institutions, and knowing the network that EFMA represent and the Capgemini expertise in the fintech field. This platform is really nice in terms of features that they've created. So the enhanced search filters, the possibility to also initiate a business conversation in a secure environment. It's actually a great opportunity for Lemonway, and I think all the fintechs around, to generate more awareness around their solutions, and also to develop their business, especially in countries where they are currently trying to develop. And the beauty of it as well is that fintechs are also able to connect between themselves to start conversation, and also see how their solutions can converge together, actually. So I think that the goal is really to start filling in the profile. We actually did that, adding the solutions, and also we are really looking forward to seeing all the results of this great program, and also enter the scale-up qualification process with EFMA and Capgemini.
In short, we need trust to work with more bank relationships. I mean, to work with more banks, and you can help us.
Brilliant, brilliant. But Barbara, on your side, any question? We are 3 minutes away from the end of the podcast.
Yeah, we already have a couple of questions, but I think that we'll only have a space for one. And I know that Jan from Target Funding Solution, he was the first one who had a question, kind of complex. So we agreed that I will now unmute Jan's mic, and he will directly ask you, Elias, and the panelists. So Jan, can you hear us? You are
Yeah, thank you.
Perfect. So the floor is yours. Yes.
Okay, thanks.
So just to make sure, I want you to be in a very, very short question, one question, not 3 questions. And I would ask the panelists to give a very short answer, if you don't mind, just to keep on time. Jan, all yours.
My question is to know if the banks which are working with startups, they don't do it just for the buzz, as you say. They do it because, in my experience, they don't want an integrated solution. They only want a few aspects from the startups, and the rest they do it themselves. They have their own user interface, they have their own security levels, they have their own people, and I think, in my experience, it's very difficult to sell them an integrated solution. So
yeah, what's your question?
My question is to the participants if they have the same experience as a scale-up.
Ashley?
Yes, Ian, I'll take your question briefly. Yes, that means for integration, full integration, you have to go through risk and technology review and all that, whereby they have to go through their central bank to get for the full solution to be integrated, and that's tough. But banks are very good at one thing. They're great at core banking. I don't think at this stage, not right now in this year, that we are disrupting core banking. Where they do, most banks do admit that it's moving faster than they can keep up. It's more on the customer experience front end, and that is evolving every day very fast. There's a new model whereby we call it like platform enablement model. That's where you sit outside the core banking system, and you know, where the fintech comes in as a platform that sits parallel to their core banking. I mean, up to depending on each fintech how they put their stack together, but that's how they can go to market faster. That's how we are able to come to a solution with them faster, rather than doing full integration.
Okay, thank you.
On our side, this is Damien speaking. On our side, the bank relationships are working very well because we are providing services they cannot do. They cannot issue millions of e-wallets at distance and on real time. They work on batches during the night, and clearly issuing millions of e-wallets all over Europe, doing the KYC instantly. This is impossible for them. So they need us, and we need them. We need them to open this bank account and to have access to this bank payment networks.
Effective collaboration. One more time, huh? We complement each other. Oscar, for you?
I can just agree with what Ashley has said. Banks have difficulties keeping up with the constant changes in customer journeys and customer experiences, and that's, I think, where fintech companies can be much more agile and provide solutions that are fast to implement, taking into account that internal bank processes sometimes are a lot slower, and that's, I think, this could be very quick wins for banks.
Fantastic.
Okay, thanks.
All yours.
Great. So thank you very much to all the panelists and speakers. It was very valuable. I think a great discussion. We are almost on time, so very good time management. And I also noticed that there were some questions from the audience that we unfortunately haven't responded. So I will definitely contact the speakers to really discuss later on. But if you have any further questions, you have the FinTechVisor email right now on the slide. So feel free to write your comments or write your remarks. We are very happy to follow up. And just a quick reminder, we'll be sending you a video recording together with the presentation slide right after, so you'll be able to share and review. So many thanks for your participation, and hopefully see you next time. Bye-bye.
Bye-bye.
Thanks.
Bye-bye.
Bye.
Thank you. Bye.
Bye-bye.